What are stablecoins? What is their use case and value proposition? And where are we with regulation, risk and compliance?
Meet Lianne Dodds, Chief Compliance Officer and MLRO at Agant, a UK-based, fully backed GBP stablecoin issuer building on-chain financial services here in the UK. In this interview, we cover how stablecoins work, the value proposition for retail customers and businesses, and importantly, we cover regulation and trust.
Knowledge and awareness wasn't that great.
Yeah.
So, Lianne, what are stablecoins?
It's essentially a digital asset on the blockchain, represents fiat currency. You know, a lot of people, like you say, will hear stablecoins. They immediately think crypto asset. It's not.
Faster settlement, lower friction, full transparency, cheaper, and with more control. The potential benefits are, of course, huge, but Lianne guides us through the challenges yet to be overcome. Welcome to Amplified.
Lianne, welcome. Thanks for joining us today. And at such short notice, we've just met.
Yeah.
And I'm dead keen to hear all about your industry, your background, your role. So let's start there.
Yeah.
Would you mind introducing yourself? Give us a bit of a flavour as to your career, your background, and specifically your current role at Agant, and a bit about the business as well.
Yeah, so I'm Lianne Dodds. I'm the Chief Compliance Officer and Money Laundering Reporting Officer for Agant. My background, longer than I care to remember, in anti-financial crime. Started off in a little building society, Newcastle Building Society, and then moved my way into working for a retail government bank, so National Savings, as their outsourced business provider. And then quickly kind of developed, I guess, a passion for anti-financial crime. So that's really where my career began, and kind of building and designing kind of control frameworks for financial crime. So that was kind of my first foray into building an anti-financial crime framework. From there, moved into Sage to build Sage Payments and their anti-financial crime framework, and then moved into a more global role on business due diligence. And then kind of came my crypto era, I guess, we'll call it. So crypto was encompassed into the MLRs in 2020, and I was approached by the Bottle Pay team to come in, as the founder affectionately puts it, when it was me and a bunch of nerds. So building out kind of the financial crime framework there, but also applying for a money laundering registration with the FCA. So that was my kind of first, I guess, attempt at that kind of application process with no outside consultancy. We were a startup, so we didn't have the budget for that. Mm-hmm. Kind of ran with that for the next 4 years. Unfortunately, we had a decision to wind down the business, so took the business through that wind down process. And then moving on from there to help Clearbank with one of their registrations, and then BVNK to look at a previous registration for them. And then I ended up at Agant. So the founder kind of contacted me and said, come join us. I was like, I'm not ready to join another startup. Yeah. And he was like, come contract with us. So I did that alongside some consultancy. And then they eventually persuaded me to join full-time as the CCO and MLRO. So been with the team for about 18 months, taking them through their MLR registration, which we successfully got in February. Day to day has been designing the control framework and is now kind of preparing readiness for launch, but also kind of working alongside the regulators to feed back on kind of policy. So that's what it looks like at the moment.
So we'll get into Agant in a bit more detail shortly. I guess a good place to start, though, given kind of Agant's mission and what it's here to kind of deliver, would be stablecoins themselves. Yeah. So on the run up to this conversation, I spoke to many colleagues, friends. knowledge and awareness wasn't that great.
Yeah.
So, Lianne, what are stablecoins? What is its kind of purpose? What's the value proposition? And maybe touch on, from a retail customer's point of view, but specifically given the work with Agant and what you're here to deliver for businesses.
Yeah, so it's essentially a digital asset on the blockchain, represents fiat currency. So I think, a lot of people, like you say, will hear stable coins. They immediately think crypto asset.
Yeah.
It's not. There are differences.
Okay.
So crypto assets tend to be quite volatile, where stable coins, as I say, are linked to a fiat currency usually. Most known ones probably to US dollar currency.
Yep.
So USDC, USDT. But obviously there are others like GBPA, which is a GBP denominated stablecoin issued by Agant. So yeah, essentially the difference between a crypto asset and a stablecoin is that it's backed by backing assets. So we don't have the volatility you see with a crypto asset. So that could be a portion in cash, and it could be another portion in high quality liquid assets. So short-term government debt, for example. So what we're seeing in the UK from a policy perspective is kind of setting some of those rules around what the expectation for backing assets for a GBP denominated stablecoin.
So to break that down, I give Agant or another platform £1.
Yeah.
You mint and issue a stablecoin to me.
Yeah.
You then take my £1 and invest it in, high quality, kind of stable assets that holds the value. And me as a kind of customer, if you like, my £1 is guaranteed.
Yeah.
And at any point I get that back.
Yeah.
So just go a bit deeper on use cases then. Where, let's start with retail customers, and I appreciate it's not, what Agant is focusing on. But if we start there, and for kind of anybody wondering about stablecoins and where it might be useful for them personally, let's start there, but then let's talk about businesses, and obviously we'll get to payment shortly as well. Yeah,
I think the retail use case that we hear a lot about is the cross-border efficiency. So cross-border payments are traditionally quite slow, they're costly. So that's where we will see kind of, stable coins are borderless. Obviously they live on the blockchain, so there are no borders. So we will see kind of an efficiency gain and a cost saving with those kind of international payments, I guess, in the retail space. Not something Agant's focused on because we're not retail facing, but that's definitely kind of where we'll see that go, I think. And I think you and I were having this conversation before, particularly for kind of countries across the world which perhaps don't have such a stable currency. We'll see more retail use on that side. So Africa, for example, are really kind of exploring that stable coin.
So an alternative to kind of a retail investor, someone who wants to protect their purchasing power in the future, kind of beat inflation potentially, that could be a valid option. Hold some stable coin rather than your local currency, and you're somewhat protected on that front. Okay. So let's go into Agant in a bit more detail then. So let's start with what's the mission? Where are you on that journey? And again, then let's go into kind of use cases and value propositions for business.
Yeah. So I think, we're making money move easier, essentially. So we are B2B focused, so working initially with other exchanges and financial institutions. So, future propositions looking at kind of corporates and treasury and making kind of those larger corporate money movements easier and cheaper.
And what's kind of uptake and adoption? And again, let's start with stablecoin more broadly, but we can talk about specifically with Agant. If you looked globally, what's adoption like with stablecoin? How do we know how many there are? What does that look like? And is it growing, kind of exponentially? Is it slow? What does that look like?
I think obviously the biggest market, USDC, USDT, is obviously the dollar denominated stable coins. UK I would say we're in the infancy, so it's very nascent stage for the UK. But I think that's kind of nature of where we are in the UK. So we're kind of in the early policy proposal stage. We'll see that kind of finalised later this year. I think, we need to see UK adoption within businesses, within corporates, before we see that in the retail space in the UK. I think, that's kind of the journey we will go on. And I think a lot of businesses are waiting for that kind of regulatory certainty before they kind of move into this space, because, big boards don't want to kind of enter into holding amounts of stablecoin, not knowing what that's going to mean for them right now.
Mm-hmm. So Agant has been going for how long now?
So it was incorporated in 2024, so March 2024. A couple of years. And
kind of where are you on the journey? What are you working on right now? Is the stablecoin live, for example? Are you transacting and so on?
Yeah, so we're in final stages of testing.
Okay.
So we secured our MLR registration with the FCA in February. And obviously being a startup, we need to make sure that we've got everything in place before we actually then kind of safely launch that. So that's part of my role at the moment, is making sure that all of the controls that we designed are operationally effective before we actually launch that. And then kind of building out the team as well at this point in time before we actually launch.
Brilliant. Obviously, you are Chief Compliance Officer. I'd love to kind of tap into that world of risk, compliance, regulation, and you've touched on it a little bit already. Where are we broadly with, specifically UK stablecoin regulation? What does that look like? I know from a kind of, you touched on crypto and the perception of perhaps crypto and the fact that it might be misunderstood that stablecoin is just like crypto.
Yeah.
I guess in the market there are certain worries about crypto. I know from my own kind of knowledge and experience of crypto, it felt and seems still even quite a risky thing to be involved in. But give us your view on kind of current perception of stablecoin, but then more broadly, regulation. Where are we with it? What's coming down the track?
Yeah, I think we're starting to see the kind of shift in kind of perception, certainly from a B2B standpoint with stablecoins. I think probably we've been fed historically, stablecoin, there isn't a regime in the UK, so it's regulated or, supervised under the money laundering regulations right now as a crypto asset. So that hasn't helped kind of, I guess, the reputation of a stablecoin, because it's in the same bucket as crypto assets right now.
Yeah.
But I guess from a policy perspective, we're now starting to see kind of that kind of transition into a regulated asset. So, policy proposals from the FCA and from the Bank of England to date have a stablecoin regime. So we'll see that kind of movement from crypto asset to separate it as a separate kind of asset.
Yeah.
And it'll be regulated under FSMA, so as an investment would be. But I guess, the perception has shifted because we're seeing kind of that want for adoption. So people understanding what a stablecoin is, how it can help their business in terms of those efficiency and cost savings, but also with the policy piece moving on at the same time. I guess we're seeing kind of that shift in mentality right now of, okay, that regulatory certainty gives us the clarity we need as a business, that we can actually go from this is great technology to actually this becomes part of financial infrastructure.
Yeah. And through the conversations that you and your colleagues are having with businesses who you believe perhaps will and should have an interest in this because of the value it can add, the cost savings and so on. What is the kind of initial response? Is it one of interest and, are those potential savings enough to kind of perk up people's ears and eyes and to start to delve into it?
Yeah.
Or is there a bit of standoffishness and you've got to work to break down those barriers?
No, I think we've actually been quite surprised ourselves at the kind of level of real conversation we're having now about kind of businesses adopting stablecoin, and particularly with GBPA. But I think obviously that regulatory certainty will be kind of the key barrier that we will see kind of entered into this year. You know, the final policy proposals will be later this year, and I think it all depends on kind of where we're at with those. It's as much about the regulatory piece as it is about the technology right now. So I think people are on board with the technology.
Yeah.
It's just that last piece of making sure that the regulations don't then bring them into something that they need to do as a business themselves.
Yeah, sure. And I'm sure there are a number of kind of perceived risks and actual risks, but I know, you know, your background is largely in financial crime.
Yeah.
Let's talk about that then. How, like, again, crypto is sometimes perceived as a vehicle to kind of launder money and all the rest of it.
Yeah.
What are the true risks, though, in a stablecoin world?
Yeah, I think, you know, there's no doubt about it that stablecoins will be used for illicit finance. And it's something I come across all the time, being the chief compliance officer of a stablecoin issuer. People always say to me, you know, like, well, stablecoins are used for financial crime. How do you deal with that? I think, you know, again, perception hasn't helped because regulators are saying the same thing. They're saying, you know, stablecoins are risky. They're used for illicit finance. How do we stop that? And I guess, you know, FATF report kind of earlier this year also came out and said, I think 84% of illicit finance transactions in crypto are now stablecoins.
Right.
But the key thing is that most of those are peer-to-peer.
Yeah.
So aren't involving regulated businesses. And that's the difference, I guess, that we'll see in this kind of space is, you know, the traditional kind of banking channels, you interact with a regulated business all the time. With stablecoins, you don't.
Yeah.
So you might interact as an issuer with a business, so from Agant's perspective, and then they might, you know, distribute that on to retail clients. And it's that downstream risk, isn't it, really? Like we see in other kind of, I guess, instruments, but, you know, like correspondent banking and things like that. The difference being that can actually move without any other institution. So that peer-to-peer is where the risk really sits. I always liken it to cash. So, you know, illicit transactions happen in cash all the time and we don't necessarily know about them. It's more the controls are implemented at the point in time where that cash interacts with a regulated institution.
Yeah.
So, you know, you can't walk into your bank on the high street with a bag of cash without being asked questions. Exactly. So it's very similar in that way. There will be illicit finance that will happen peer-to-peer. There's no denying that. But we still have those controls at the regulatory interaction points. And I think if we get kind of policy wrong, then that's pushed offshore and it's not within the regulatory perimeter.
Yeah.
And we don't have any visibility or any control at that point of time in the UK because stablecoins will still happen. They just won't be regulated in the UK. They'll be regulated somewhere else offshore.
Yeah.
And we have less control in that space then. You know, it's a point that we've been speaking with regulators about, that kind of wider ecosystem monitoring. So when we designed our stablecoin, we designed it so that we could freeze it wherever it was. So whether we have a direct relationship with that customer end holder or not, we can freeze those tokens wherever they might be in the world. But the question comes as to the legality behind that. And that's the difficult part. Because, you know, as the money laundering reporting officer, I'm quite torn in that situation because I need to protect the business from making the wrong decision. So, you know, we use blockchain analytics. They don't always get it right. Attribution can be wrong.
Yeah.
So the attribution of risk, that can be incorrect. And if we make a decision and freeze tokens that we don't have a relationship with that end holder, we don't have a contract with that end holder either, where do we stand legally at that point in time?
Yeah.
So we're having conversations with regulators that actually, this world brings us more opportunity because cash, we can't see those transactions. Stablecoins, we have a record of every transaction and where it's been. And there's opportunity to actually stop it in its tracks, which there aren't with cash. But we need the kind of regulatory certainty behind making those decisions because at this point in time, we've become kind of quasi-law enforcement, which that's not a role we can take on. And as we know, law enforcement really takes some time to investigate. Rightly so, because obviously we need the evidence behind it. But by that time, often the transactions moved on several times because this is a fast-moving world.
And you talked about that kind of interface back into a regulated business such as Agant or some of your potential customers and so on. What does kind of good due diligence look like in that space and so on? Is it any different to what we see today in traditional banking and so on?
No,
is it the same sort of thing?
The same sort of thing. So the usual kind of KYB, KYC controls, your transaction monitoring, and then obviously an additional layer of blockchain analytics on top of that so that you can actually screen transactions on the blockchain. I don't think it's like completely new in terms of financial crime controls. There's obviously that additional layer on the blockchain, but essentially just the same thing.
Yeah, makes sense. I want to talk about the opportunity, the size of the opportunity, and I guess it's a good place to ask given the backdrop of where we are with the regulation and so on. Let's say you and I were sat down 3 years from now. We're having a coffee and you've got a big smile on your face. You're dead happy with the progress both Agant has made in this space, but with how stablecoins have been adopted and are being used more broadly.
Yeah.
What's changed in those 3 years, would you say, to make you feel so happy?
The policy piece. So I think, as I've said already, the technology's there, it's ready. If we get the policy bit right in the UK is where we'll be smiling, because I don't think we've ever seen this where kind of the technology is evolving at the same time as the regulation. Often the technology will come first and then kind of regulation is applied iteratively. And I think, where we are in the UK right now, there's a couple of pieces of that policy proposals where it's really kind of make or break time.
Yeah.
If we get it wrong in the UK, we don't get the economic benefits from having a stablecoin that's GBP denominated and regulated in the UK. I'm sure there will be GBP denominated stablecoins, but they'll be outside of that regulatory perimeter and we won't see the economic benefit of it either. So there's a couple of pieces where, we've fed back constantly to regulators. I think they've done a good job of, it's hard. I sympathise with them because building a regulatory framework for something that use cases might not even be defined for right now is difficult because, you get that wrong and potentially end up defining regulation in a way that, stops innovation.
Yeah. Yeah. One thing I haven't asked actually is, Maprim, we work with lots of financial services industry companies. A large proportion of our kind of value proposition and our work has been in the kind of anti-financial crime space as well. There's a lot of talk now, in sales calls, in initial kind of openers and so on, about the desire to adopt AI across some of these processes. Where's your head at with regards to AI and what might be coming in that space?
Yeah, obviously we're hearing kind of across the industry agentic payments and things like that. I think we're a way off. It's going to be so difficult from a compliance perspective, like how do you interact with that agent knowing that they've made that decision on behalf of your KYC customer? So again, I think we will see a real policy shift in that space because we need some regulatory standards as to kind of how that's going to work in the future.
Yeah. And what about internally in your kind of due diligence processes? Do you see, a time whereby you'll be adopting kind of AI tools to support your due diligence, appreciating that it's probably, it will be far lower volume to what some of our kind of retail
I can definitely see that in the retail space. I think we're a little way off using AI for our processes because we'll have a small customer set in terms of direct customer relationship, but I can see the benefits of that. It's just obviously the level of what's made as a decision by AI versus what's kind of then interacting with a human to make that final decision. We're going to have to tread very carefully as an industry because we don't want to be making decisions solely through AI in this space. We will see, bad actors making absolute use of that.
Yeah. I think that kind of human in the loop assessment is key. I can't see a world where AI answers all of it. You'll still need those
I think this
enhanced
industry is
processes.
probably quite safe from that kind of AI takeover. We're always going to need a human in the loop.
Yeah, for sure. So you've talked about kind of the 3-year vision and where you want to see change and what's going to make you happy in a few years' time. What would you say is kind of currently in the way of that vision? Yeah,
I think a couple of policy points that we've been feeding back on. So one of the policy points is on-demand redemption. So as I've explained, our kind of customer set will be B2B. So they might have an onward distribution model to retail clients and then anyone in the world could end up with GBPA stablecoin. On-demand redemption for all means that any end holder can come back to the issuer.
Right.
So from our point of view, that isn't the way stablecoins work today. So if you look at USDC, USDT, the most successful stablecoins that are out there, they have secondary market makers. So, those end holders generally will go to an exchange or someone they already have a relationship with in that secondary market, and generally will convert rather than, come back to redeem.
Yeah.
So whether that be to another cryptocurrency or back to fiat. So essentially that's kind of, I guess, changing the business model today as it works. And the difficulty with changing that business model as well is, certainly from Agant's point of view, we're set up to work with businesses. The controls are designed to work with businesses. If we then introduce being able to redeem the stable coin for anybody in the world, we then have to redesign our control set. So a business will usually start off designing their control set by setting their risk appetite, right? So sit down with your board and you say, what's our risk appetite?
Yeah.
Fire off a few questions about what we want to do as a business, and then kind of land on there and design your control framework from there.
Sure.
So how do you design your risk appetite and your control framework when actually anyone can come to you and you have to redeem that stable coin for them? So, retail's not within our risk appetite at the moment. So we'll have to change our risk appetite because anyone can redeem the stable coin, so they can be a retail end holder. Countries across the world have a higher risk profile.
Yeah.
Some are prohibited in our risk appetite. If we have to redeem, where do we stand?
Yeah.
So we're asking questions back to the regulator like that at the moment in our consultation responses, because as an issuer, that means we basically have to have a banking relationship, which works any country in the world, which, as you'll know today, no clients probably have that. Banks have their own risk appetites as to what countries they want you to serve.
Yeah.
So, not only that, that creates operational burden. We'll have a smaller compliance team working B2B. We're now going to potentially have to have a team that's sat there probably twiddling their thumbs most of the time in reality, because that's not the way the market works today.
Yeah.
But just in case people want to redeem that stable coin, we'll have to be ready to do that.
Sure.
T+1.
Yeah.
So, you know, it really changes the operation of the business as well. Yeah, and it's kind of global, as I keep phrasing to it, as kind of that global operational muscle that's needed in a business to actually deal with that. The other piece is the capital requirements.
Yeah.
So there's a K factor requirement for stablecoin issuance. So obviously there's backing asset requirements. As we said, every pound stablecoin is backed with a pound, whether that be in cash or in high quality liquid assets. But in addition to that, there's the introduction of kind of this K factor capital requirement, and that means that we have to hold 2% of all our stablecoin in issuance as capital, which for a startup business, pretty tough.
Yeah.
And how do you manage that on an ongoing basis? So as your stablecoin in issuance grows, you're going to constantly need to raise to actually support that, potentially having to stop issuing to make sure you've raised enough capital. So it's things like that which really then look at kind of where does that stablecoin market go? Is it only really kind of the global operational players that are there now who have the big balance sheet to support that? So I think, you know, those kind of couple of policy issues are the ones we keep driving home, that if we don't get them right in the UK, that's the turning point. It's going to be a big blocker,
isn't it?
Yeah.
Let's flip it then, and let's end on perhaps a more optimistic note, and I guess the things that make you optimistic about where you are, what you're seeing coming down the track for stablecoins, and again the size of the opportunity. Go ahead.
I think the collaboration that we've seen with regulators, actually, we've not seen it before. So they are listening, they're taking on board the feedback. We've recently had the stablecoin inquiry at the House of Lords. So we've seen kind of both regulators give evidence at that as well. And I think, you know, they're open to hearing more from industry. So I do think we are at that kind of turning point. I still feel positive about it in the UK. As I say, they are listening, they understand, and they're wanting to make this market a success because they also see the opportunity for the UK. So, yeah, I think hopefully we'll be sat down here, you know, come new policy next year, and we'll have a successful stablecoin market in the UK.
Excellent. Well, I'm going to hopefully hold you to that follow-up conversation because it's dead interesting. It really is. And I know kind of being involved in a startup, but not just a startup, it's kind of the startup of an industry almost as well. It must feel quite an exciting thing to be part of as well. So I can only imagine, and I can imagine the world could be very different in a year's time. But yeah, it'd be great to kind of sit down again and see where you're at, see what challenges you've come up against, if you're up for it.
Yeah, sounds good.
Thank you for your time. Really appreciate it.
No, thank you.